Okay, hi there guys, sorry a little bit late then. I hope we're all doing well. Can you hear me loud and clear? Better check whether I'm coming through. Yep, all good. Just give me a yes if you can hear me alright there. And we'll rip into it. I had to quickly get myself a coffee. I think we've got a bit to talk about today. All right, fantastic. Thanks, Nathan. All right, let's get stuck into it then. Now, obviously, well, firstly, let's start by saying welcome, guys. Welcome to anyone that's new as well to TradeSetup, the live stream. We've got the 5th of Feb. So a bit of a fun morning this morning. Opened up with a bit of a belting, is what we expected. Didn't expect it quite that much. It was down 80. I don't know where it is right now. I think it's down 70 or so points. Actually, it's not that bad. 34. That can't be right. Let me just see. 86. So it's not that good. All right, so we got. I'll get that picture back up. Made it a bit of fun this morning. If anyone that's new, join us on Twitter, the top left-hand corner. Facebook, the top right. Don't worry too much about Facebook. It's not as important. I think Twitter's a good one. And bottom right, subscribe to us at YouTube. That's our handle. So anything comes up, anything we do on obviously on YouTube will come up to you if you subscribe to the YouTube channel. You'll get an alert from them as well that we've gone live and something in case you missed the TradeSetup app alert. Now, the US, obviously it's that theme of bond markets, bond yields rallying up, which we've spoken about a lot in the past. I think they're sort of the extreme level on the bonds is at 3% yield level, and it was reaching up at the 3% yield level. I hope we're still coming through. Yep, we should be still ticking through. Yep, so it's at that 3% level in the US 10-year bonds. They've sort of all got their eye on. Now that's what's putting pressure on the equities markets. We all know, the cost of debt goes up as interest rate goes up. It's the cost of financing as well, refinancing, whatever. It's at higher rates, so just the general cost of things will go up as the bond yields go up and drag up interest rate hikes. The thing is, too, I think they were looking at about 2 to 3 rate hikes for 2018. It could go to a fourth. And they might have to lift their pace of rate rises in the US, the Fed Reserve. So that's what's giving the market a bit of a spook. Just let me know if it's dropping in or out, guys, because I've got a funny sort of a message popping up. Just going to check that my health stream is good. All right, well, we'll plug away. Numbers look all right. All right. So yeah, that's what's pressuring the market quite a bit over in the US, and obviously that's we saw that on Friday. We had some good payroll figures out in the US. I think better than expected. So that's just spiked the bond yields higher. Equities just went into a bit of a free fall, bit of a nosedive since there. That's dragged our SPY futures down overnight. So pretty much what we made up on Friday, we've given it back plus more today, which as expected. I think markets free fall. They grind high and they free fall lower. Just the nature of the beast. I think the bears were out banging their drums this morning, but we've seen a few stocks bounce. I think in Australia, I don't know what much of you read too much about interest rate rises in Australia. You got to remember the backdrop, I guess. Overall, the backdrop in the US is US growth, global growth. Europe are looking to taper their not quantitative easing there. Well, it'll just basically stop it, and they'll be looking at rate rises soon too. So it's all on the back of good, healthy growth, economic growth. But obviously what we all know is these markets have been getting a bit overcooked of late, which really what we've seen, I think now, for me anyway, I'm looking at it more as a bit of a profit-taking scenario, and where to from here. I don't think it's anything like a GFC when things are going to come out of the woodwork and saying how, mortgages are rubbish. There's a big collapse in the bond market. It's sort of opposite. It's obviously when nothing can go up forever. So it'd be nice to see if we can just find some good little buying opportunities. I think it's what we need, especially in the US. It's probably what they need, a bit of a a bit of heat to come out of that market and start building another base and potentially going up again. We'll have to see what happens. Obviously, was it company, I'm forgetting the word, earnings, it's sort of all been factored in. G'day, Laurent. Hey, Alan. Have been factored in quite well in current valuation. So if it comes back in more in line, this probably makes it a bit easier for people to jump in on pullbacks. But I think after this sort of hammering what we saw on Friday night, I think the pullback's got to have a bit more substance to it. But the actual, I guess the base building, it's not just a V-shaped recovery. It pulls back a little bit and bangs straight back up again. I think it's going to be a bit more complex than what we may expect, but we'll see. All we can do is wait and see. Let's drop that down. Let's get into the markets now. Our XJO, we'll start there. Obviously, you can see that is on the daily chart. It's all in context to the market moving higher, don't forget. It did sort of, we got this grind higher. I don't mind that move up through. I'm probably going to have to get my other program up in a minute. So we're seeing, market hold some level. It started washing out a few of these sellers here, popped up. It's washed out a few of these late sellers, but then it held higher lows, bringing more selling, and it's pushed it up to 61.50. We've had a bit of a correction here down to 6,000, and then we started popping back up again the last few days. Today, obviously got hammered, but it's still in context to holding a higher low, and it'll be interesting to see if this little double bottom at 6,000 is enough to hold it up, and we start seeing a couple of narrow range days around that 60.50 mark to bring in a bit more buying and start edging the market back up and through these highs at 61.50 and just continue on. Obviously, it's got a lot to do with what's happening over in the US, and I haven't got the right screen on. Just 1 second. This should be better. There you go. I keep forgetting the last few candles there. But yeah, that's just minimize that. My phone's going to go off in just a second. Sorry for whoever that is if you're watching and you've got a problem. I can't see the right hand side of the chart. I hope that's better now, Pete. You can see that. But yeah, it's that same sort of scenario. I think if we can hold in here, it's still, what we're seeing is in context the overall market moving higher. Look at the weekly too. It's pushed up. We've had a bit of selling come into it, and it's quite heavy selling, but it's been soaked up. It's holding higher prices. So at the moment, the daily's getting got a bit extended up here anyway. So we may just have more of a complex, and by complex, I'll draw it up. Whether we see a push through the lows, it'd be interesting. I'll just draw it up here. There we go. There we go. So what we're seeing, a leg up here, and this is a bit of a washout. This is all sort of washing out scenario, and then it works its way high, and you can see it starts accelerating higher. The pullbacks are less. The acceleration, all the kick-ups, the rallies are better, are stronger. So you can see that type of price section. And we saw a nice little correction here, and whether we can see this hold up here, or we're going to get a major lower high and have a deeper correction, potentially back down to that 59.50, 59.25 zone. It'd be interesting to see. It's just whether or not, really, the way I'm looking at it is whether or not the US has some more downside. The US Dow opened up about down another 200 points on the futures today, but we all know that's not US driven. That's more just driven by punters over in Asia and Australia opening it down. And they could just, it could be like a bit like the Trump, they got hammered during the day, and when the US opened, it just went straight up once he got elected. Could be a bit like that. So just be wary of getting too negative on the market, too much of a bear. But it always comes down to your technicals. If we get the key level for me really on the daily is just this level down at 59.25. It's this, whether we correct a bit lower and we come back down maybe to retest that zone, or what do we do here before we start finding a bit more confidence in the market. Does that make sense there, guys? That's my view on the ASX anyway. It's still a longer term trend up. You're going to get these toing and fro, I guess. It's just the size of the move which has scared people more in the US than anything else. But then again, if everyone's honest with themselves, you can't expect the US just to keep going up the way it is without some sort of washing out of the market. So we'll take a look at that now. That's remember that. So that's the S&P. And so that's a big sell-off here, but really, we're still nowhere near the MAs, and it's definitely an uptrend. No one can argue that. We can't just say, oh, and I'm not a big believer in these thing. What do they say? Selling in February, you know, it's traditionally a good selling opportunity, or go away in May, whatever those sayings are with the market. I think it's more, for me, it's more technical. It's got to be a bit more substantial than that. And the technicals to me are not saying to sell at all. Maybe profit taking, which is great, but I wouldn't be jumping in and load up on the short side just yet until we're going to see a major correction. But that's the daily chart. The weekly, sorry, that's the weekly. The daily's had a bit of a pullback. That's more back to the mean. We could get a complex in the way. That's what I was talking about, wasn't it? Complex is more like you got to move up. That's your potential lower high, sorry, high low. And we've got this sort of move. Complex is more of your secondary leg down. So you get a lower high, a lower low, and then maybe we have to start dragging some more buyers to head higher. So that's what I'm talking about with a complex correction, which I'm thinking could play out here in the ASX. With regards to the US, you know, she's a good solid move down. A couple of days down here, green day, bang, down. We had a 200-point drop on the S&P. Not 200 points, 60-point drop on the S&P. 600 on the Dow. But again, it's just more that reversion back to the mean. And anything that goes up hard is going to come down hard as well. But it's all in context of the overall move of the market. So we're yet to see who's winning out, bulls or bears. I think obviously the bulls are winning out still at the moment. It's just whether the bears start to jump back in and really pressure the market. Are we going to get a lot of profit taking? What's of note, what we should be taking note of is obviously the bonds. We've spoken about that before, but when the bonds are at higher prices, obviously, they're more attractive to get yield. And say you get a lot of these funds in the market, they've got some good built-up positions, and they're looking at it thinking, well, okay, bonds have finally come back online again. The yields are starting to kick up. Now, if we buy them here and we get an increase in yields, we're going to get some good little return. We're going to get, that's where, you know, all funds are always chasing yield, whether it's in the stock market, bonds, wherever it may be, gold, who knows, commodities. And at the moment, I think maybe they could be just viewing what we're seeing here. This US, obviously, it's overcooked. Has it finished? Whatever, but it might be worth easing out a portfolio. They could be thinking this anyway. It's just my view. Easing out of portfolios, taking some risk off the table in equities and putting it over to bonds because they're finally starting to get some yield there, which means there's probably maybe a bit of selling coming into the market. I don't know if that's going to happen, but I see the potential for that to happen. In Australia, it'll be interesting to see how we go because we haven't quite reacted to the upside as a lot of these other markets, so obviously the US and Europe have. And we are potentially looking at rate rises maybe towards the end of the year, maybe next year. But I think the pressure's on the upside. We haven't been we haven't seen sort of those economic figures non-growth as much as, say, the US or Europe have. Actually, Europe, not doing too bad. I think we're just doing okay. Nothing out of hand. I think what you got CPI figures got to be between 2 and 3%. The top end of the scale is when you start to look at rate rises. I think we're edging up there. Anyway. There's probably a lot more people in here that know a lot more about macroeconomics than I do, but this is just what I picked up on the way and the way I would look at the markets accordingly. FTSE is still the overall longer term trends up. We can still have that correction up all above the anchor at 12,000. Sorry, that's a DAX. This is a weekly chart. So if we're looking at anchors down here at 12,000, we could chop around here. It's just going to be choppy, I'm seeing, more than anything else. A couple of good sell-off days here. We might find some buy-ins, a bit of a reaction high, build a lower high, press lower. But as long as it's above that 12,000 level, the longer-term uptrend is still intact. That's the DAX. I've gone over the Dow pretty much. FTSE, here we go. FTSE, it's been hammered from those highs at 78. Obviously, about 400 point, close to 350 to 400 point move lower once it ticked up to those highs. But again, in context of this overall trend up, it's still intact until you break the anchor level. Now, the anchor level, I'd suggest, is down here. It's around that 72 mark. So it's sort of like a 50% retracement of that move up. Now, if that's the case, we could easily hold up here and continue on higher over the longer term. But I think just the speed of that move down, and again, that could be purely in respect to the markets going up so hard, they can come down just as hard as fear grips the market. But we'll see. Now, what I want to go over is I'll get over the sectors. So I just want to have a quick look at some sectors, in Australian sectors. I've got to find them. Where did I put them? Here we go. Sectors. There we go. of just what could be moving. What's that? The consumer staples that got hammered today, obviously. That sector's copying it a bit, and that purely could be because it's been viewed as more of a double top, bit of a pop out through that top, bang, straight back down. Again, still the anchor for this to potentially, for money to flow out of this sector would be a break of that through that 10,000. It's still within, holding the trend higher, and longer term it's still grinding higher. It's just getting a bit of, a bit of selling up towards these previous highs. If you can get back on the monthly, previous highs up towards 10,750. So of course, once it extends into that level, there's going to probably be a bit of sector rotation out, maybe, but we'll see. Discretionary, consumer discretionary, that's still not such a big day over in that sector. It's still. Sorry guys, look like we just dropped out there. Just let me know if I'm coming through. Yeah. Should be back there, guys. Just let me know. I think we're back online. You're back. Just go, you. All right. I haven't gone off again, have I? This is going to be annoying, isn't it? All right. We'll keep plugging away. Off. Rush around here. Sorry, guys. Off, back on. Let's just see. All right. So this is the energy sector. Like I said, with crude oil, didn't sell off too much. I'm sorry, I'm just watching the figures if you're wondering what's going on. Back on. I watch. This is the program. We're just going to watch those numbers. If it goes to zero, obviously we've gone off. So that's a streaming program we use. All right, we'll plug away. I've got a feeling it's just I might have to upgrade it, but we'll see. Anyway, we're back up there. Yeah, so energy. I'm just looking at crude oil as more US dollar based than anything else. I think obviously the US dollar, people are looking at interest rate rises means a stronger US dollar, which means potentially weaker crude, and that's probably got a bit of selling there, but I think there's actually a case for a weaker US dollar, the dollar continuing lower. You get these sort of pops higher, obviously, because it's more got to do with interest rate yields, and if they're looking at potentially better interest rate yields in Europe, they could be selling the US, buying the euro, so that trend could continue, which would mean a weaker US dollar, obviously. So we'll see. Look, we'll see how it goes. Goes off. It goes off 1 or 2 seconds. Okay. Yeah, it's annoying. I'm going to have to look into this again. All right. So energy, that's that one there. Financials. Look, if we're talking about interest rate rise in Aussie, it could kick up. It's this one. Obviously, it's like the banks. We spoke about the banks before. This could be, you've got this good. Obviously, this is a monthly chart. Good sell-off here, picking back up, holding higher lows, still holding higher lows. And we just fell short just recently. Look to the weekly at 7,000, just below that 7,200. Obviously, a few problems with the banks. They've got to get through some issues. It could be holding higher lows, but it also could be working off lower highs. So lower highs you'd expect to pressure the market. But the longer term trend has been up since basically 2009 into banks or in financials. So if we see that continuing, we need to hold higher lows on this. And if you go through to the banks too, and if you're just factoring what could be happening with rates, if rates are rising, obviously the banks are going to do better. Anyone refinancing or interest rates for mortgages, obviously the income, there's been a massive boom in housing in Australia. So they've got their books, what they've got on their books with regards to exposure to the mortgage market. As long as nothing catastrophic happens, we get foreclosures, but I think they factor it in quite a bit. Rates, I know we just did bought our place. They're looking at 7.5% to 8%. If you can sustain, that's great, and that's what they look at. whereas rates are around 4% at the moment on mortgages. So they've got a lot of room to move. There's a lot of leeway the banks have built into loans. So, but if that's the case, they raise rates, then they're just going to get a better kickback from it hasn't locked in any interest rates. So I'm sure we all know that, but that could be what could be supporting the market longer term into financials. We'll see. Probably not much more I want to go through there. That we've done financials, XH. What was that one? That's this one here. That's healthcare. It looks like it's looking quite good. Look at the longer term. It's still kicking higher. We're getting a bit extended up here, obviously. So that could be, but it could have a bit of a blowout to the top. We don't know this, but the trend is definitely up on that as well. It's just getting away from the MAs, so maybe a bit of reversion to the mean in that sector. A lot of them are getting a bit overcooked. XGD, I thought we'd go with that. Gold. Now, that, I haven't actually looked at gold. I think, what's everyone else's opinion on gold? Oh, back to zero, really? What is going on? Sorry guys, I'm just going to quickly check. I know we probably... Everyone there? Oh, are we back on, guys? I know we did drop off then. Just running a bit of speed test, and I reckon that's rubbish. That's my download speed. Upload is the struggle, isn't it? That's not very good. So the upload speed I'm having issues with by the looks of it. Let's just get rid of that. What else have I got open? We can potentially get rid of. Not much. All right. Let me close that. So we're back on. I'm hoping, and I hope we stay on. All right. So this is gold. I know I'm not a big fan of buying gold just at the moment. I just thought I'd touch on this only because it's more going with the US dollar. And if US dollar heads south, I think gold is sort of heading south. It's more of a safe haven asset. And I think with bond yields ticking up also, you got to remember that's also a safe haven and you get yield on it. Yield on bonds. You're going to get a return on your money. So with gold being more of a safe haven, it's more of in times of crisis, like a GFC or a massive sell-off. There's some problems out there, but really the global economy is doing quite well. So I don't see the need to be jumping into bonds, whether it's jumping into gold. If the US dollar keeps ticking lower, it should help buoy. Obviously, it's going to buoy the Aussie, buoy gold prices because it's inverse to the US dollar. But in respect to people diving in as a safe haven, I don't really think so. So it'd be interesting to see how it goes. But this is your XGD, your all odds on gold sector, I guess you call it, or the small cap golds. It's been going. It had a good push up, obviously through 2016, and it sold off. And then we've kicked up again, but we're struggling to get through this 5,000. We're just there now, a touch below it now. We're holding high lows, so this could. I mean, if you could look at it one or two ways. It could explode to the upside, but I don't see the case for that at the moment. Which would obviously that's all your gold stocks exploding higher. I don't see the case for that just at the moment. I'll probably draw this a bit different. Let's just go back a step. You can see that there. If that's the level it's just struggling to get through and we're just washing out, you would have expected that to spike up, come back, contract a bit at higher levels, hold higher levels, so bang, maybe hold higher levels and then go. We're just not seeing that strength at the moment. That overall structure looks good, but it has still got the potential to just bang, head straight back down and maybe test down towards those lows. But yeah, I'm not agree with you, Peter. So Aussie gold, long-term week of interest rate rise. Oh, you're talking about the Aussie dollar or is that gold symbol? So interest rate rises, basically you're looking at the Aussie dollar getting stronger because there's more. And what you've got to look at is a return on the Aussie dollar. Higher interest rates in Australia mean you return on the Aussie dollar if you're holding it, as regards to other currencies. Does anyone understand the carry trade and all that in currencies? Or what the carry trade is all about? Because don't forget, if you can hold bonds, and you get a lot of currency flows from country to country. It's because of the interest rates associated with that, or the potential raise in interest rates associated with that currency. At the moment, most of them look like potentially going up. The US, obviously, yes. So it makes sense to hold funds in US dollars and sell a less yielding currency. Potentially, I can't think of one at the moment. Maybe like the Aussie, because we're not looking to raise rates too quick. Maybe the euro, but obviously the markets are looking forward. So to hold funds in in US dollars, looking for that interest rate, the increases in interest rates in the US makes more sense to hold it over there. But the thing is too, what are you going to do with US dollars when you've got it? Are you just going to sit there in US dollars and get that appreciation? Most funds and things look to make work of that money. And maybe they're looking for the potential it's sort of a twofold when you've got the interest rates and currencies. It's twofold. You've got one, what's happening with your interest rates on your currency and what's happening in that country, what can you do with your funds too. Now, Europe could be looking to do quite well as they start to lift. But then again, so is the US. It's a hard one to get my head around, to be honest. If anyone has any comments to make about it, I think interest rate differentials, but basically, yeah, there's big flows of money. And that's why I'm sort of looking at potentially flowing into Aussie. If that's the case, if the US dollar is going down, flow into Aussie dollars as we look to raise rates. They're going to get that interest rate or that extra appreciation yield on the Aussie dollar. Plus, there could be potential in our market because of commodities as well. If there is a bit of a commodities boom. I know it's been booming the last few years, but it's probably getting a bit overcooked. A bit of heat's got to come out of that. Well, not a few years, I guess, but a bit of heat coming out of commodities, and then it start to lift again. So it could be a good spot to park Aussie dollars, and then what are you going to do with it in the gold? Yeah. So what are you going to do with it if you park it in Aussie dollars? Then you'd be looking to put the money to work in the stock market, but and we haven't gone as hard as other countries. That's why I just think there is potential for inflows into Aussie and selling of others, maybe selling euros, selling US, maybe selling pound, who knows, and coming into Aussie and just looking at loading up on some of our stocks there. What was your question? Aussie long-term weaker if interest rate rise? Yeah, I don't know. It just seems to be going. The yields went up on yields on bonds went up on Friday night, obviously, and gold dropped off along with the US dollar. I think it did spike up a bit. But then it could mean that there's no real safe haven. I don't see it as a safe haven trade at all, and that's half of what gold does, a safe haven investment. If you're looking for yield, you probably wouldn't technically put it there. Funds go into bonds because they get yield on bonds. Yeah, look, it'd be interesting. I'm not one to. It's hard to put it together because sometimes gold goes up, the US goes down. Sometimes it's been going down with the US dollar drops. It's a bit of an each way bet. I think it's more got to do with the overall economies than anything else. Anyway, I'll get sidetracked. That's probably most of what I wanted to talk about right now. Is there anything you want to chuck in some stocks that you want to have a look at? And we'll get into it. I wanted to touch on, obviously, opportunity. Look at CCA. And we were expecting that, I guess, on the open today. It got knocked down on the open and it's just spiked back up. Held above our entry level at 112. It's still holding around 117. I think that's still a really good play. It has gone a bit hard. Anyone that's holding it, I think that's one that I'm still pretty happy with. I actually bought in a bit more, to be honest, this morning at 110. I just saw it getting hammered. I still think this longer term, once Ivy Coin kicks on, and it's getting oversubscribed, the ICO. Once that comes out and they say we're fully subscribed to that, and there's a lot of news coming out on it. Well, there's forums you can jump on, all this sorts of stuff with your cryptos. Once that takes hold, I think this really should get a kick on the CCA. It's just, obviously, it's gone a bit hard. Last couple of days, got sold off on, what was that, Friday? You can see this candle here, big red candle, sold off from above 135. So a bit of heat's come out. And obviously with the US getting nailed on Friday night, we've opened lower down at, I think we opened at 110, traded 108. We've been bouncing since, so it'd be interesting to see if that theme continues into the close and we start holding above 110, build another higher low, and then just go again. But yeah, I think the story behind Ivycoin is going to support this anyway. CSL, well, that was up a minute ago. That's still, I think it's in a nice little position to continue on higher. Again, that depends on what happens to the overall market. It hasn't copped too much heat today. From the ASX, it's down 94 points on the ASX at the moment. Hasn't copped too much heat. It's still holding up. We'll see how that one plays. BPT, that's Speech Energy. We're up on that one. It's actually green from the open today. It's obviously opened a bit lower. When did it close on Friday? It closed at, that's a weekly chart. Closed at 141.5, and we're trading at 138 at the moment. Opened, what was it, 136, I think, which was the lows. So that one, I mean, that doesn't bother us too much either, because really we've got our stops just below that one, around that 125 mark. I still think that's got potential to kick on. It's still holding trend, so there's nothing really to do on that one. And ACX, it just does nothing until more news comes out. But we'll see if that all goes through nicely. What was that? Change substantial holding. So that's your Aconics we've had for quite a while now. If that's just going to go sideways until more news comes on, and if that takeover offer gets confirmed at 780 or 90, we should see that little spike, another little spike up to that level anyway. So that's it. That's all we've got at the moment. Catch up, yep. Helen, VIX fear factor skyrocketed. Yeah, it did. I don't know what the percentage is. The VIX, anyone knows the VIX? It's the volatility index. It's been at, as the markets, in a bull run, they tend to be quite low, but it's always, and they have been at all-time lows for quite a while now on the VIX, and it's been spiking up of late, the last probably week or so, with these sell-offs in the US. Obviously, that's going to help if you've got puts, if you bought some puts a couple of days ago, there's some options on the downside on the S&P. One, you've got a bit of a kick up in volatility, which helps spike prices as well, but also the drop in the overall market has helped you come into the money. CCA, yeah, we've just gone over CCA. I still, like I said, Pete, I still think that's looking quite good. Who's holding CCA? Oh, Brent, good work, mate. I know I'm feeling that probably Greg had it at about 85. He's been smashing this. I think he got somewhere where he sent out an alert, he bought into it, and it was a beautiful little setup. We just didn't actually didn't send out that buy recommendation, but did send out that it was going to probably head higher, and you got this little move up. I think he sold out of some, held, and he's bought into more again on this little pop. So he's been doing quite well on it. Yeah, if anyone's like me, I'm thinking this is going to go quite well. The thing is, it's in clear skies too. If you look at that's all the chart, that's all the data on CCA. Go to the daily, and you can see it's just obviously it stopped. It come onto the ASX, got sold down, held those lows around 50 cents, spiked up to 90, all the way back down as we had a bit of profit taking. That second round from the IPO, I'm suggesting probably sold into that as well. Took it off the table, but since then it's been holding quite nicely, holding high lows. It started to accelerate up to 140 or 135, what we saw just lately, but I still think there could be quite a bit in this one. It's into clear skies. Generally, when they're into clear skies, there's nowhere really to sell, if that makes sense. It's sort of, there's no clear resistance levels to sell into. It's just hold and see what happens. But if it's holding high lows, it's always going to be quite positive, you'd think. That's looking good. There's another one that I wanted to look at. That's probably it. Sydney's the short. That's looking a bit shorter at the moment. I don't know if anyone's got Sydney airports. I think with this one, to become a nice little, it could be a sell just through that 660. Looking at the weekly, the weekly support zone is going to be just below that $6 level. You've had a good move, good strong move up. A good correction lower just to clean out a few of those late buys into that, just below 6, and it pushed up, just popped through 6, pulled back, built that high low, but then it struggled to get back up to those highs, and it's built another lower high, or just around 750, say, and even with a washout, and we started to head south since then. So that's the weekly. So that's when we were looking at it, just when it was breaking down here as a potential is going to cause some concern. Did react off that 665 zone. We saw that little pop up, and then more weaknesses coming back into it. I'll be very interested just to keep an eye on this one, just to see if that still finds some weakness, because there's a lot of people, you know, it's been a good healthy trend up since basically 2009. Started getting a bit ahead of itself. So whether we're going to look for a complex correction, meaning that we're going to a deeper correction through 6, who knows? 86. Love it, Greg. So that's on Sydney. It's just started looking through as a few shorts, maybe just to hedge off some of the exposure. We're not loaded too much to the actual market at the moment anyway. So one's not going to move. BPT could still hold up on those highs. CSL looks to be doing all right. And CCA is obviously big, down nearly 5% today. But I like that one actually. So we're not exposed too much to the downside anyway if we do get a good sell-off. But it's always worthwhile if it looks that way, just to potentially look for some nice healthy shorts. Stuff that's been on the move up. Oh, I'm just trying to find something. I don't really know. Stuff that's getting ahead of itself. That's not it, is it? Now that I'm looking, I can't find any. Anyway. So what would I ideally be looking for on the shorts? If anyone's got some suggestions, just point them out. I'll just close that and open it back up again. All right, this might work. So what we're ideally going to be looking for to be short, if we want to see a market that, you know, it's headed up. It's had a good healthy trend up for quite a while. I've always liked putting my support across the bottoms, across the higher lows, and then you just want to see a bit of hesitation. You know, maybe we get a bit of a spike through those highs, but then you want to see the market start to build lower highs, especially after we start to break down through that support zone. So that's what I'm talking about with Sydney. It's looking like we're getting this rollover. This is what we're always looking for, that kind of rollover as you get lower highs pressuring the market. But here, what we've seen on Sydney is really the anchors. The longer term anchor for a decent correction is around 6. It hasn't reached there yet, so you could easily just correct here. You know, there's two ways to correct, whether you just blast through and you have a deep correction, as in the market blast through support. It pulls back maybe 50% of this move, and then you start building. So we could get this type of action, and then we start building higher lows and start holding again. So this is your deep correction, or whether we just sort of, if I can draw it here, oh, that's not very good. If I can draw it here, you sort of break down through the support level. This is our anchor, like we've got just here. And actually, we'll just draw that in red, actually. That's your support zone there. We can just sort of pull back to that support zone, but still hold up, and then just correct sideways as we get a bit of chop, maybe a bit of a washout of lows, and then start to lift. You can easily correct sideways. You don't have to have a complex correction that goes down, if that makes sense. And that's a good show of strength in the market. If you're correcting, like here we correct sideways, say Sydney does that and we just correct sideways, that'll be okay. I ideally like to see the potential. If we start breaking anchors like that, then I think there's going to be a lot more room to move on the downside if you're going to go short. And that's ideally what we'd be looking for, where the anchors potentially, what we always like to see. If I can just blank, there we go. If what we could see, I'd always be looking for the anchors to get broken. So if we see a bit, that's our anchor there. We see a bit of a sell-off. We get the market start to come down, and then I'd like to see a bit of, we call it back and fill, when it breaks through the anchor, you know, for a short, and then you pop up, and then you start to get weakness come back in. Ideally, I'd like to place myself in that position there for a short after we've broken the anchor, whereas at the moment, say Sydney as an example, is above the anchor. And that's your swing level, whatever you want to call it. Ideally, if that's the case, then that would be nice. And I think that's where you get, we'll draw that up, that's where you get one move down, and then you look for your secondary move down. And you're trying to take advantage, you know, low risk trade, you know exactly what your risk reward is, you know where potentially you're heading to. And then it could just completely blow that level out, and then you've got to look for support zones to come into play as well. And if it blows through one, then you're looking down to the next one. Just try to trail it down as you go. Does that make sense there, guys? So this is the way I like to approach my shorts, because I think shorts are more risky and short-lived than going long and then buying into the market. But there's probably quite a few shares that are a bit overcooked at the moment that potentially could have a good... We're looking for that complex correction. By complex, I mean breaking in the anchors, this kind of correction, and then start to build from there. And then if it starts building up here, we start getting this type of action, grinding higher. The next, you're looking for that break of the anchor to the upside to potentially go to start to look for a long break, builds, back and fill, and then looking just what we've done in the past. WTC. Let's look at that. Look, it's probably, if we've got it in our platform, it's shortable for sure. Let's go to it. WTC. WiseTech. The thing with this one, it's just grinding high. There's no reason to short it just yet. Obviously, this is looking at a daily chart, and if we just analyze what the last price action, I mean, there's nothing on, even on the weekly, what the last price action has done, or most recent price action. We've got markets grinding high. It's still holding trend. Your most recent anchor leg to this little pop up, we've had a bit of correction here. It's just washed out a few of these late buys, so you can sort of analyze it like that of what the market's doing. You can see it up, pull back, up, high, low, high, 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 low, high, high. At the moment, maybe it's getting extended here, but it could easily just pull back to the mean, build another high, low, and then go. So if you're going to short it in here, it's going to be very risky, because it could easily just blow you out. The market, the whole overall market could turn around, start rallying. The US could have a 300-point up day tonight, and then all of a sudden this is blasting off again. So you really just got to look for that strength. So what you'd be looking for, so looking for that, not strength, the weakness in the market, you'd like to see, let's just draw it here. If that's our anchor, we've come into the anchor, built the anchor, we're pressing up to new highs. You don't want to see this and then sell into it from here with your risk there, because this just all above the anchor, it could be just a bit of a correction, but buyers are still soaking up the selling, just letting them pull back a bit, getting better prices, and then we start to lift. And we could be quite suddenly. You'd rather see, move down through the anchor and then that type of price action. All right? I just think it's different, because once it breaks the anchor, that's going to put a lot of pressure on the buyers. If you haven't got out, the late buyers in here that potentially haven't been stopped out, and start to see this, and then you see a lower high build there, that's what you want to see. So ideally that would be somewhere around, was it 1350? And it's a long way off here at the moment, but then I think that could lead to some serious weakness, and you get that really good correction lower. Doesn't mean you have to short at 1350, but if we break that, bounce back up to 1450 for say, then we start to get weakness come back in, then you'd be looking for your short sells. Yeah, it is too strong at the moment, and it's still holding up. Even today, it's opened down a bit, which you'd expect. A bit of profit taking, especially after that little blowout through 16 on, that's a week, that's a daily, on Friday. It's still pushing up, so they're still buying into that. The only thing going for the short at the moment is extended. There's no setups. There's no real weakness coming into it. It's just that it's extended. But if you go back and look at here, that was extended pretty much a good part all month on the daily chart. With this rally up, it was extended all month. So if you're selling purely on the fact that it's extended or overextended to the upside, it's just a good way to get caught out. WC maybe too short. On BB US for the US too. Okay. BBOSZ, what's that, Laurent? That's not obviously, is that a bond? It's obviously not on us. Is that the US bonds? Okay, that's good. All right. Anything else you want to take a quick look at, guys? We're dropping off in the XJO. A bit of a capitulation. I'll see these hold up here. That's why we were actually, CSL was up on the day from where it closed on Friday. Just not too long ago. It's just rolling over. The overall market's rolling over. Yeah, it looks like the banks are starting to grind down, aren't they? I just want to go over ANZ. I think that's worthwhile. Look at ANZ. This, yeah, I'm just trying to. I mean, this whether it's going to be weak or strong, it's hard to say right at the moment. And for any bears that are out there, it's still good. You know, going through 2,800 could be a good little sell with your risk just above 29, say. But I don't mind this type of price action. It's holding up, and we could be just it's consolidating around that 28 to 30 mark on ANZ, but it's still potentially longer term. I mean, longer term, it's still holding higher lows. It's just at that level now where we've had a good sell-off, obviously through May. It's bounced back up. It tried to grind its way higher. Some more selling's come in, so that's more of a confirmed, but it's not technically, from a technical standpoint, a confirmed lower high until it gets through these lows at 27, say 25 or 50. But it hasn't started to look like it's holding up again. You can get this little pop-up, holding around 28, 25, just pops up through 29, sold off again. So if this starts pushing higher and building a higher low, then pull back, build a higher low, and then going again, I think we're going to start targeting up and through 30, 75, and then it's looking up towards 33. But at the moment, we'll have to see how it goes. But that's ANZ. I'm seeing, you know, a lot of the banks. Probably NAB looks a bit weak, but that's all in context. This good, healthy move up through 2016 to 2017. It's corrected lower back in May, and I guess that was when all the banks had their problems, and I think that's still getting worked out. So once we know what they're in for, whether it's in the way of a fine or whatever it may be, once that's confirmed, then that could be factored in, and the market, bang, up we go. Whether it's more regulations on the bank, who knows what's going to happen. But once that's out in the open, then I think these banks could be starting to, you know, they're showing some signs of strength. Even CBA, look at this. I don't mind CBA at all if you look at that on the weekly basis. Good run up into 2015. Sell off down here, found some major support at 70, pushed up, so that's breaking that downtrend, and then we've had a good correction. So really what we'd be looking for is this to hold as a higher low and to start working its way back up again. Then you'd be targeting through 88, targeting up to, you know, those highs at around, was it 96 or so. Double short. That's interesting. Maybe I can get it up on here. All right, we'll look at BAL, Janice, no problem. Might quickly, just remind me, I might quickly just to later on just look at the bonds in the US, just to see what they're doing, because obviously that's what's driving the markets lower. See if there's potential for those yields to kick up or the bonds to keep dropping. BL, this is a weekly chart here. Bellamy's, it's right up towards those highs at 16 bucks. So, and see how it's powered up into those highs. Probably just we'll draw it the weekly. I'm not a big fan of the way it's just powered up into those highs. If I was going to, I wouldn't buy it up here at all. And you can see this move up. You know, you got support way down here at around that 10 buck mark. So that's, you know, could have a 25% pullback or 50% pullback of this last little move up, wash you out quite a bit, pull back to 13, then start build. It could even grind its way lower like this type of price action. See how it spiked high sideways. It just got a bit healthy, but it's right up into a big level at 16. So yeah, I wouldn't, looking at the weekly, I wouldn't go near this just yet. I want a bit of heat to come out of the market. Like we see, you know, it's extended up here. I want it to start failing at lower highs and start working its way lower, just to clean out a lot of these buys that have built up through this little spike higher. If we look at the daily, that's 10 bucks, isn't it? Yeah, so that's that $10 level. So wash out a lot of these buys that bought it through here. Say 13 and above. I want to get them cleaned out of the market before I'm happy to start jumping back in again on this one anyway. Purely because it's right up near a strong resistance zone. Now, if it just blasts up from here, good. You know, that's great. But if it doesn't, I think it's got a higher potential to actually correct a bit lower off a key resistance zone of 16 than it has to just turn around and blast straight up through it, especially the backdrop of what's happening on what's happening in the overall markets at the moment. BAL, we've gone through that. BBOZ, strong bear ETF. Better shares. Let's just have a look. I'll see if I can get it on. All right, let's quickly look at the bonds. This is the UST bonds. I think it's 10-year. Notes. The 10-year bonds. It might be the 30-year. I think they're 10-year bonds, but either way, these are that's your bond market there. You can see, even though we're seeing quite some heavy selling at the moment, we've had that market push down, and whether we're going to get this another serious correct, well, if we can just pick that up, another serious correction all the way down here as yields rally, or are we going to find some, because that's a long-term trend line, obviously up, whether we spike down to that level and start building back up again, and that would mean there's a bit of pressure coming off the equity market on the downside. It's extended. There's nowhere, we're extended to the downside just here. You can see this little pop down into oversold territory, and we did extend down into that zone. So it'd be interesting to see if this can hold up here and start bouncing back up, and then I think you get a bit of a bounce in the equity markets. But it has got the potential, just by looking at that little spike up, the way it's got sold down here, and it's been grinding higher. Whether we start accelerating, but we need potentially another lower high to build. Not just straight down from here. I wouldn't expect it to go straight down like that. I would expect more of up, maybe a bit. I want a continuous chart. How come that won't say? Let's just cancel that. I would expect. What I'm going to do is delete that. No. Remove. View remove. And I'll draw it up with this. I think we're going to be expecting more of this, maybe a bit of chop, and then if we start holding and you get this type of price action again, we'll look like we're rolling over. I think this lower high could take us down through support, or again, you're going to be looking at this level here just to see if it retests, or we just drive straight down. Then I think we'll be targeting quite a bit lower. That would mean there's going to be a lot more pressure on the overall indices, on your shares and stuff. So a bit of action coming in, so that'd be worthwhile looking for some shorts. It's some solid shorts at the moment, because we don't know what this is going to do. Where's this going to drive the overall market? Your shares anyway. Don't forget your shares, you're coming off all-time highs. So if that's the case, we get this type of price action, then I'd be a bit concerned. But it is, it's all about this long-term trend line at the moment. Yeah. I want it as a bigger bet. Have too long exposure and need time to unwind. Yeah. Yeah. All right. What we're going to just look at here? Was it the short one? What is it called? BBO. There you go. You can get it up on TradingView. Where'd it go? Why can't I get it? Oh, doesn't it? All right, bugger. I'll see. Oh, there we go. Yeah, that's So what is it? A short. Both ETFs available in the Australian market. Just see what it says here. I'll have to go that. So it's a double short, is it? It's been picking up steam, but it sort of looks. Oh, let's skip that. It's getting extended to the downside. Look at that little pop up here. Beta trading managed units fully paid. Okay. I'm just trying to find out exactly what it is. All right. Anything else you want to quickly look at, guys? We're just getting towards the end of the session. Probably a bit of a mixed bag. Sorry about all the dropouts too today. Earlier on, it looks like it's been solid since then. So I don't know what's going on. Maybe it just we get too many people. It starts struggling a bit. All right. All right, guys, let's just see what's happening. Market's down nearly 100 points at the moment. See that BB, AZ, ASX, better shares, showing strong bear ETF. Shared to provide investors with a simple way to profit from or project against the declining Australian share market. Oh, that's interesting. It's negatively correlated, yet it looks like it's down on its knees when the market's been going up. Strong bear, that would, probably not understand it completely. It's a double short, I guess. All right. Anyway, let's call it a day there, guys. Thanks very much for joining me. Father Bear. Thanks for joining me, guys. I hope you enjoyed it. I hope it wasn't too much of a pain there that we dropped out a few times. We'll be back in on Thursday, and I've got a feeling I have to upgrade my system just to see if it can hold. There might be a few changes to be made on that. It should run a bit better. But yeah, thanks for joining me. Enjoy the next few days. Hopefully we don't get another smash in tonight. Don't be surprised if it does rebound quite a bit. And then we start another push higher because there's quite a few. Just remember, 600-point drubbing on Friday in the US is going to mean a lot of people squeezed out of the market. It's just how much more squeezing it's got to do and what these bonds do. So keep an eye on it anyway. And we'll chat about it again on Thursday. Cheers, guys. I'll speak to you then.